Today, we're taking a closer look at one of the fastest growing trends in senior lending, asset-based loans and alternative equity products designed specifically for older homeowners who may not qualify for traditional financing. Stay tuned for all the details. We'll have that right after this short message from our sponsor.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
Welcome back, and thank you for joining us. For years, retirees have hit the same wall, with traditional HELOCs and home equity loans often being out of reach for the older homeowner because they don't meet today's strict income or debt-to-income ratio requirements. And even those with an excellent credit history and hundreds of thousands of dollars in equity or assets, they're being turned away, not because they were not responsible borrowers, but because their taxable retirement income doesn't meet a conventional underwriting approach. And now with banks tightening credit standards, that problem has only grown worse. A recent column from Shining Star Funding explains how asset depletion and asset-based mortgages work and why they're becoming an increasingly valuable solution in a non-qualified mortgage or non-QM marketplace. Now, non-QM loans are those mortgages that fall outside of traditional qualified mortgage standards and rules, and that allows a lender to approve an applicant using flexible criteria such as assets, bank statements, or alternative income documentation, rather than strict DTI or W-2 requirements. However, asset-based loans are not just limited to non-QM loans. Recently, notable reverse mortgage lenders have launched non-reverse mortgage loans, yes, that are underwritten primarily on the homeowner's equity and assets instead of debt-to-income ratios. And this is where asset-based solutions are becoming a larger part of our industry. Instead of qualifying borrowers on monthly income, these programs evaluate liquid assets, home equity, retirement accounts, and investment balances and convert them into calculated eligible income streams. And that allows an older homeowner with a strong balance sheet but modest cash flow to qualify for financing that would otherwise be out of reach. Now, this, by the way, is a similar approach that is used in the HECM's financial assessment, which imputes income from assets that are not actively generating income, such as IRAs, 401ks, or certificates of deposit. Now, reverse mortgage lenders themselves are expanding beyond the HECM to meet this growing need. And High Tech Lending's Equity Select is a prime example. We recently interviewed them. It's a HELOC-style product for older homeowners that avoids the payment shock of traditional HELOCs, and it doesn't rely on conventional income underwriting. Then we have Longbridge Financial, who recently introduced the HELOC for seniors, another non-recourse option that is tailored for retirees who want predictable terms, transparent draws, and underwriting that recognizes real-world retirement finances. Several other reverse mortgage lenders are developing similar non-reverse equity-based loans to reach a large segment of seniors that are rejected by banks but are still needing access to home equity. Now, what all these solutions share is flexibility for homeowners who don't need or want a full reverse mortgage, whether it's a HECM or a proprietary jumbo. These products offer an acceptable middle ground. It's access to the home's equity without rigid income tests, without amortizing payment spikes, without a growing balance, and without the hurdles of traditional bank underwriting. In a market where more older Americans are now house rich but cash flow tight, these innovations are filling a major gap in retirement financing. And for originators, this is a reminder that senior homeowners are not just looking for a reverse mortgage or a HECM. They're looking for solutions to tap into their housing wealth, and asset-based programs, along with the next generation of HELOC alternatives from reverse mortgage lenders, they're expanding your toolkit to support aging in place. Now, what are your thoughts? You can leave those in the comments section below. And if you found value in today's episode, please share it on your LinkedIn network. We have a YouTube channel. Please subscribe. It really helps our channel, and it also lets you know any of our latest content when it's available. And if you want to catch up on your reverse mortgage news, we curate that in our weekly podcast. That's HECM World Weekly. We have both a video and audio edition. Listeners can listen and subscribe on Apple Music and Spotify. Thanks so much for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find right here at HECM World. Have a great week.